So this week we're going to talk about the insurance industry, and the reason we're going to do that, Steve, is because a few weeks back you said that you could see that the world is going to become uninsurable, and that's going to be the downfall of our financial system. So just the end of finance. So we'll investigate all of that, which sounds like a lot of fun. We'll investigate all of that this week. But first of all, what set me off down this track, and we will have all had experiences like this. I tried to change the insurance on my car. And, we all get insurance for our car because you have to. And then there's a question about, do we insure everywhere else where we should? There's a huge problem with under-insurance, which I'll come to, whether that's a good or a bad thing. But with my car, and I'll mention the company, it was Marshmallow.
That's my God, that's a name that gives you that's real substance behind marshmallows.
That's right, we're a bit squidgy.
Yeah, okay. Is it run out of Nigeria?
No, I don't know. Who knows?
Well, it sounds possible the way the story is building
I think
up.
it's somewhere. They're all, for some reason, they're all in Wales for some reason. So, not far wrong, perhaps.
So marshmallows in Wales. Okay, this is opposed to Christians in Wales. All right,
Anyway, I'd got my car. We've got a second car for a long time. My wife has been going on about second car. So now we're now a 2-car household. Four people in the house. We've got 2 cars, which is fair enough, I think. But anyway, the one car had gone down from being used for 16,000 miles a year down to 5,000, but was insured for 16. So I went to the car insurance company and said, it's changed. And of course, you have to do it all online. So I changed the details about what the mileage was, expecting that there would be a significant premium reduction, because I would have thought the risk of me getting involved in a crash would be 2/3 less if I'm driving 2/3 less of the time, you would have thought. So maybe the insurance would be, maybe not 2/3 down, but half. But anyway, it was reduced by, I think, about 17 or 20 pounds. And the cost of applying that change was £45 administration fee. So I ended up paying £25
for the privilege of
downgrading
insurance.
my insurance policy. So when I quizzed them on this, they said, why just such a small reduction? And they said, that is because it's based on real-time wholesale market pricing. So obviously at that precise time, there wasn't a great deal of demand for people who were driving less. So I tested the theory, and I found that my $850 premium, if I took it brand new somewhere else with my new mileage, was only going to cost me £300, not $850. So I challenged them on that, and in the end they said, okay, well, what you could do, of course, is leave, which I did, and they said, we will pro rata pay you back what you owe, plus we'll take out, I think it's $250 admin charge or $150 for the honour of doing that. So that's what we did, and I worked out pro rata. It was exactly 1/3 into the year. Their calculation of 1/3 of the year was different to mine. Therefore, the amount they were going to pay me back was wrong. But this is scientific fact. Number of days, pro rata, you can easily work out the number of days and how much they owe you. But they were like 60 quid out. And I
presume above rather than a discount.
Yeah, exactly. They were giving themselves £60.
Just clarifying that.
Yeah.
You did leave a certain uncertainty hanging in the air.
No, not with insurance companies. It will always be they win. That's the simple argument, Steve.
Yeah.
So anyway, and I challenged them on that, and they said, "Oh well, that's what our algorithm says." So I'm saying, well, okay. You probably need to change your algorithm, because if your algorithm is systematically overcharging people, this is how class actions come down. If you did it for 20 years or 10 years and you did it to everybody, you're going to owe a lot of money somewhere down the track. And if it's found that it's all down to some bit of computer code, but maybe it's just insurance companies trying it on. Anyway, in the end, I got them to halve the transfer fee. But the fact is, I spent an afternoon working with an insurance company who's got the time. And that got me thinking. And I'm not saying that Marshmallow are shysters, because I don't want to get sued.
Well, they're not snowflakes, obviously.
But they're not snowflakes. But they aren't white and squidgy.
I'm sorry, if I walked on a Monty Python skit, I wasn't pre-warned.
No. But anyway.
The Marshmallow Insurance Company.
I had to get that out. Anyway, because then I thought, well, this all does raise the question, doesn't it, about insurance. It is a license to print money. But how
until everything goes belly up.
Well,
which
that's
is what
the
we're
other thing, you
about.
see, with this insurance policy, right? This is why I was also looking at it, thinking because the car's worth about £6,000, right? So 850. The year before it was like £1,200. £1,200 to insure a car that's worth 6,000 is a bit crazy. And then there was 900 excess. So I'm thinking, so if something did go wrong, then I've paid a third of the cost of the car. So the insurance was based on the assumption it would be completely written off in 3 years' time. They just, but they cannot lose. Except they did, because I went somewhere else. But it's just a crazy industry that is making a lot of money out of something that we have to do. But I mean, if I had the choice, I think I'd go, well, it's, and I looked at third-party insurance because I think it's not worth insuring, but I do need to insure in case I kill somebody. And the difference between third-party and fully comp insurance was nothing at all. Just, third-party insurance just seems like it's just there now because they have to offer it. So I don't know. It's so insurance companies are there. They're making a lot of money. Actually, 2.5% of GDP in the UK is the fucking insurance industry, Steve. 2.5%.
I'm not amazed. I mean, because what insurance companies do, and there's a reason we practically need them, is they distribute the episodic risk of events. So there's going to be some house in the UK is going to suffer from a flood, or some person is going to have a car accident. And what we do is we don't know who it's going to be, so we have a probability of it happening, and we pay a bit more than the probability times the cost as our insurance premium, and it means that if we're the unlucky individual who has that event, then we don't get wiped out. And this, that's the legitimate basis for insurance in general, but it's an argument in favour of a government insurance system rather than a private one, because with the private ones, people don't realise this. I found out. I found the soft end of a hard bargain when I had somebody drive through a roundabout in Sydney at 70 kilometres an hour, believing it was a give way to the right sign, smashing into me as I was sneaking in at 10, and then he made the mistake of telling the policewoman that I entered the roundabout first, and then he got a quick lesson in the actual legalities of roundabouts. So
was this recently?
Oh, it's decades ago. No, I think I think my hair was a different colour back then. Right. You can't insure against that, can you?
No.
But anyway, I was literally got caught up on all the. He tried to get out of it, and what happens when you buy insurance from somebody? There's a quid pro quo in any contract, an offer and an acceptance, and there has to be an exchange of value. And when you buy an insurance contract from somebody, you assign the right to sue to that company. So that company adopts your right to sue. And so what then happened with the other party, when he suddenly got schooled in the actual legalities of roundabouts, he then tried to reverse his argument to say that he got into the roundabout first at 70 kilometres an hour and I got in second at 10, and somehow he managed to hit me. Well, that didn't go down too well. So I got a claim from his insurance company for me causing the accident. And fortunately, his insurance company was the same as my insurance company. So I sent them the legal document, and then that was the end of that particular claim. Now, that's, if you aggregate up, what you've got is all these insurance companies hiring lawyers to sue other insurance companies over who's going to end up paying the episodic cost of a car accident. So in my experience of it, it's one of the most obvious areas of commerce that makes more sense to be provided at a state level, where everybody has the same insurance company. You'd have much lower premiums. You wouldn't have all the lawyers involved in fighting over the bits and pieces of episodic events in car accidents and fire.
But it's
and so
competition,
on.
Steve. You've got it wrong.
It's
It's
so important. It drastically reduces costs. All these lawyers drop out of the trees cheap and free. We call them drop lawyers in Australia.
It's so good for the economy because it's keeping all those lawyers in jobs. But I mean, it's the 80s that created all of this, isn't it? It was that Big Bang. What a great event that was, where we saw all of this opening up to competition for financial services and insurance.
And as a result, insurance is now 2.5% of GDP.
Yeah.
So a cost is 1/40th of GDP. And this is a nice little point from one of my students. I still remember them raising it in a tutorial back at Western Sydney. I trashed a student last week, so I've got to say something very positive about one today.
Okay.
And that is, he said, is finance a cost centre or a profit centre? And he just said, hang on, if finance is growing, you're actually celebrating the rising cost of doing business. So in that case, insurance is a cost.
Yeah.
So you'd be better off trying to reduce the cost of the whole thing. But the real reason this matters for our conversation is that the insurance is designed to spread the risk of episodic events.
Yeah.
So
when we have a systematic change, we have a...
Systematic is another story entirely.
Well,
and that's what we're facing with global warming.
It is. And let's focus in the entire second half on all of that. I'm quite happy as just, dissing the insurance industry for the first half.
I'll put a few, I've got my knees at the ready.
But I mean, because the other issue is, of course, as well, that it's getting better at defining who and what it will insure and what those costs are. So, for example, artificial intelligence. I was reading an article today about how, artificial intelligence could be used so that you get insured as you use, basically. So you put into your map to say, okay, I want to go to Liverpool. Well, that's going to put your insurance up straight away. And I'm going to take the M6, but I'm going to take the M6 toll road because that's a little quieter, which costs me a bit more. And they might go, okay, well, in that case, we'll reduce your insurance premium for that trip. I mean, then... if insurance is so fun, based on who I am, what my record is, the route I'm taking, how tired I am, maybe all these other factors, that's not insurance, is it? I mean, that is getting it down to the cost, which is so finitely defined. Why would I need insurance? Why wouldn't I be taking that risk myself? And the more you define it, the more insurance premiums go up so much for those people who are a higher risk that they can't afford the insurance, so they don't have it. And those people who it's low risk, the cost is so low, they think, well, might as well do it, I guess, because we're only talking a few pence. So the idea of private insurance ultimately is it is only going to insure those people. It's not going to cost them any money. And everybody else will become uninsurable, which I think
which becomes one of the paradoxes. We've all been through that with insurance companies. I had one time when very, very early days of installing car alarm systems. I think my alarm was either damaged or stolen or something like that, and the insurance company turned it down because it wasn't recorded on the contract. There was no option to record it on the contract because it wasn't a standard object at the time. So they're forever trying to evade the direct consequences, and that's a bit like with AI, they fine-tune it, as you say, which road you're driving on and which direction on what day. But it's still that's still stuff which is tailored to make as much as they can out of the episodic events. So we pay more than in the individual. We pay far less than the cost of if you have a car accident and you wipe out. I don't know. Say you bump into. No, not Jeremy Corbyn. Who's Starmer? Gave a car accident and write off Starmer's car. Bound to be worth a fortune. Then you can't afford it. You're in the wrong. You go bankrupt. So you pay far less than that cost, but it's distributed across many, many people, and you pay in the aggregate. We pay far more, and that's where the profits of the insurance companies come from.
Well,
but as I said,
and healthy profits they are too, aren't they?
You must have the numbers.
Well, I've got some. So I've got it for Aviva, which is the largest insurance company in the UK. So their gross profit margin, have a guess, last year. You would have thought this is
gross profit margin.
Yeah, you'd think this is high turnover, low margin business, wouldn't you? You'd be thinking, well, they would be dealing with
the 25% comes to my head.
Well, not quite that. Well, last year wasn't that bad, 16.8%, but 21.3% the year before. I mean, this is vast amounts of money that they're making.
Yeah,
and of course they're investing this money as well, of course. So it's all
speculating, please.
Yeah. Yes, speculate. Well, the whole thing is a risk game, isn't it? So they insure based on risk, and then the money that they get, they make a calculated risk as to what returns they can get from how they invest that money.
Markets and bonds and so on and so forth.
By and large, that's their main game, isn't it? It's their investment. It's just another way of getting money to invest to try and get returns.
Yeah, because your money is effectively in escrow, but actually it's been paid to them, and they then give you a service over that year. But of course, that gives them a cash pile that they can put into other activities. So they're charging you, and they're also trying to make money out of the gain. And this isn't insurance in this instance. But one thing I was vividly aware of in the 1980s, before the stock market bubble of '87, was the increase in the amount of money by superannuation firms going into share market purchases. So at the beginning of the 1980s, 30% of superannuation money went into the stock market. 87, 70%. And of course, that turbocharged the bubble, which then turbocharged the crash. People are too young to remember or too forgetful to remember. that stock market crashed 25% in one day. So, you can have a wonderful period for 7 years and then bang, it's all wiped out in a day. But yeah, they're jumping in front of that particular steamroller trying to pick up pennies as well.
So, I mean, you mentioned, the government should be providing insurance. They do, of course, for a major expense in America, obviously, is health insurance, which we don't have in the UK because, in effect, the National Health Service is insurance cover. So we do have the government.
Real rather than monetary, of course.
Yeah. So we do have that there. Whereas America spends, well, depending on what numbers and what year you're looking at, somewhere between 2 and 4 times. I think normally it's about 3 times the amount that the UK spends on health. And that is because about a third of I think it splits about 3 ways, actually. I could be wrong on the complete detail, but roughly a third of people are paying health insurance costs. That's a third of the expense. A third are just paying out of their own pocket for medical treatment, and a third is being provided by the government. Whereas obviously in the UK, it's pretty much 100% is being provided by the government. And as a consequence of that, because of that open competition that they've got, they're paying 2 or 3 times in total for health in the United States compared to the UK. And the upshot of it is they've actually got a shorter lifespan. So,
yeah, more disease, a shorter lifespan. It's a bargain every way you look at it. A bad one.
Yeah. So, interestingly, they have mortgage insurance provided by the government. It's out of the, what do they call it, the National Housing Scheme or whatever?
The mortgage insurance goes to the lender, not to the borrower.
Right.
Let's not forget this. This is people think when they're forced to take out mortgage insurance, when they have too low a level of deposit to avoid that right, and it's getting virtually everybody has to pay it these days. That's insuring the lender in case you can't meet the loans. Doesn't help you.
Yeah.
So I think that might be why it's covered by the government, because the American government is the best one that money can buy.
Yeah, exactly. So it's there, obviously.
Maybe the worst these days.
Well, the whole idea was, though,
temporarily.
The idea of the insurance was so more people would take out loans to get houses, so it would help the housing sector.
Yeah, that's right.
And it did. It came
keep the bubble up.
Yeah, well,
keep the bubble flying, as George Orwell might have said.
Well, it goes back a long way in the United States. Though. It goes back to just after the Great Recession in the 1930s when they introduced it to try and get people back into buying houses. But so there's a couple of examples. But generally, though, we are uninsured, not necessarily uninsured. Well, you are more likely to be uninsured, obviously, if you come from a lower income household. In America, there's areas which you're uninsurable, and we'll talk a lot about that in the second half. But for example, a lot of black communities, the cost of insurance is too high, so they just don't get insured. But lower income households are more likely, as you might imagine, to be uninsured just because they can't afford it. They probably have higher premiums because they are, higher risk because they are low income, and therefore they're probably going to leave the toaster on, or whatever insurance companies work on the basis of. So it's without the government intervention like we're seeing in the National Health Service, then you are going to have this huge discrepancy where some people might have a fire in their very expensive house and get all their money back. Somebody has a chip fire in the house that they've been scrimping and saving for, and they lose everything, and they're out on the street. So there's no good in this, is there, in the insurance industry?
Well, I mean, there's no good in letting the insurance company industry self-regulate, which is what we've allowed, and set their own premiums, and the extent to which people don't realise that when they take on an insurance contract, they're passing on their right to sue, and then part of the calculation insurance companies make as to whether they're going to pay up or not is whether it's worth their while to get that right, or whether they'd be better off somehow reneging on the obligation and then not getting a right which they regard as worthless. So all this stuff is a way in which competition makes things worse, not better. Yeah.
And then obviously an opportunity to keep on embellishing your profit. So just vertically integrate. So if you're a car insurance company and you're getting car repairs, then why not own the car repairs? Because you can charge a great deal for the car repairs and get people to pay the excess fee. So you win there as well because, the criteria
And
is...
tell me Marshmallow owns car repair companies?
I don't think they do. I think they are.
Okay, okay.
They're and look, they are the same as all the others.
I've got to look this up. I mean, I don't trust you, mate. Marshmallow Insurance.
But there are so many. There's literally hundreds of insurance companies. And the reason is because
Who the
they are...
hell chose that name? It's just priceless.
Because they were short.
Bear with me. Let's do the break and I'll bring up Marshmallow Insurance.
All right. Good opportunity to take a break. Then just don't take anything out with them, Steve. I don't want to get sued by them because they've obviously got lots of money.
If they're selling marshmallows, I'm interested.
All right. Look, climate change is the important factor. We'll look at that when we come back on the Debunking Economics podcast.
He's not joking.
Well, Steve has spotted Marshmallow Insurance. Look, there are hundreds of these companies, Steve, because it basically is a financial exercise, isn't it? You just need a spreadsheet. You've got a customer contact center, you've got a risk model. You bring the money in, you work out how much is going to go out in premiums. You'll have a team of lawyers to challenge those premiums, and then you use the rest of the other 90% of your day is spent investing that money, so you get a better return. So you're getting these very high margins. So, I mean, you can imagine that the amount would escalate. And you say, well, okay, but that would mean there's increased competition, so those premiums would come down. But
yeah, good luck with that.
Yeah, it doesn't seem to have happened, does it, when 2.5% of GDP is accounted for by the insurance industry. But, I mean, you made a comment a while ago, and we were leading to it in the first half, that the world's just going to become uninsurable. I mean, there are pockets of uninsurability right now where the government has to step in, where, for example, we build houses on floodplains because we've got nowhere else to put them. Just look at Western Sydney, for example.
The classic example, of course, is Florida, which is both sinking and being flooded at the same time. And then you have outrageous storms. I am still waiting. I mean, I'm very disappointed with the weather. I just was hoping to have a storm pass through Trump's property. So rather than calling it Mar-a-Lago, I can call it Mora Lagoon. That hasn't happened yet.
No, because he's got God on his side.
Sorry?
Because he's got God on his side.
That's true. Yeah, God must be directing him to go to southern Alabama instead.
Yeah.
But it's when you start getting an increase in the probability events, and this is where the whole 1 in 100, 1 in 1,000 year calculations come up. Those are the calculations the insurance companies are making, and the basic story is they know that 1 in 100 years is going to occur. So they set it up so that they'll lose money in the 1 in 100, but they can make profit in the other 99 years. But if you then have a 1 in 100 year event becoming a 1 in 10 year event or 1 in 5 year event, that just means you look at the sums and you simply cannot get people to pay sufficient to cover. You've got to increase the premiums. They become unaffordable. People decide they won't take them out and the company collapses, but also the properties you've got can no longer be insured against flood damage and so on. So if you end up being the buyer of a property where you can't get, when insurance is too expensive, the flood comes in and you're wiped out. And so the role of insurance companies in spreading that episodic risk breaks down if there's an increase in systemic risk. And we're seeing that on a global scale with global warming.
Well, you see, the argument would be that because the insurance companies weren't insuring those areas, people weren't building those areas.
Oh, look at this. I saw a brilliant one from I think he might have been described as right-wing American commentator saying, all these people saying that global warming is going to mean you can't, people are going to be trapped in their properties on the coast of Florida. They can always sell them. Yeah, sure. Who's going to buy a house that is literally underwater? It's amazing people's capacity to come up with bullshit to hang on to a paradigm.
Scuba divers. They might like it.
Sorry?
Scuba divers might. They're the only people, really.
The scuba divers, that makes sense.
Yeah. You get up in the morning and scuba dive from your living room. But generally. But I mean, but the argument is that, as I said, that the insurance industry will help manage all of this, because if a property is uninsurable because the insurance industry has identified the risk from climate change for that property, then you won't be able to get insurance for that property, so you won't buy. No one will buy it in the first place, and a builder won't build it there.
So it already exists. This is our issue. It's the existing infrastructure and whether that can be sustained given global warming. And obviously, if you got, did you see that there was a a tornado that cut through St. Louis recently and just it tore off the top story of a skyscraper. Now, when that sort of stuff starts happening and then increase the odds of it occurring and the levels of damage become potentially catastrophic and may just make it impossible to make a profit out of insurance in that city, then suddenly if you want to build a building, you're required to take out insurance, and you can't. And so the first...
But doesn't that mean that building doesn't get... I mean, I take your point,
But
what
buildings
about
already
buildings
exist,
that already
yeah.
exist? But,
Yeah,
but,
buildings that already
moving
exist.
forwards, because we've got a growing population, where's everybody going to live? Well, surely the insurance industry's got a point that they are going to help determine where that, buildings happen only in low-risk areas because they're not going to insure it.
You suddenly can no longer tell what's a low-risk area. That's why I mentioned St. Louis. I don't think there's ever been a tornado going through downtown St. Louis in history. The floods in New South Wales, I mean, we're both having had our attachment to New South Wales and Sydney in particular. Those floods in the northern regions were described as 1 in 500 year floods, but they had 3 or 4 in the previous 8 years, which were 1 in 100.
Yeah.
So you're getting to the point where you simply can't say which regions are going to be feasible to be able to get insurance because the risk is going to be so dramatically more widely spread with the levels of storms, temperature, etc., etc. You're going to have non-insured businesses, non-insured houses.
We've got a lot of uninsured businesses as it works out. I'm trying to see where the figure is.
Yeah.
So a Deloitte report, the 2025 Global Insurance Outlook, I'm sure you've read it, Steve. You couldn't wait to get your hands on a copy. They reckon that the uninsurance gap is 32% in the United States. So, things that
32% of people who should have insurance do not.
Yeah. It's 75% in Europe, 92% in Asia, 97% in the Middle East. So the insurance industry not particularly big in the Middle East. It's fair to say. Whereas in the United States, it's there making money, but still a lot of people who are not insured. And you imagine that is just going to increase as premiums go up, because of course that's how the insurance companies will respond. Because we know. Legitimately, they are quite bold and open about it. When you say, why has my insurance premium gone up so much? And they said, because we had a lot of claims last year. You go, well, okay, not for me.
That's the whole idea. It's spreading. This is why, having trashed insurance companies in the first, particularly Marshmallow, oh my God. Now
we're fine to that point, by the way. Just work out your algorithms. It could have been a lot easier if you just actually given me a £500 refund so that I didn't have to go and buy something £500 cheaper from elsewhere.
Insurance, I expect insurance to be the first canary in the coal mine over global warming. And imagine insurance companies looking at the impact this has on their bottom line, it wipes it out. If you start having more and more systemic events, where 1 in 100 if floods become 1 in 5 year floods, then you are simply going to, you can't charge enough to get the revenue in. The costs when you do pay out are going to be enormous. They are the first line of companies which should be saying the impact of global warming is far worse than we were led to believe by economists. And that's what I'm hoping that they're the ones who are going to say we have to take this nonsense on and change direction. But I mean, the odds are it may be the insurance companies end up going the way of the dodo because they're not willing to change their business model or not willing to confront the systemic understating of the systemic risk we face.
Yeah, well, but they of course they will just keep on charging higher premiums, and there will be areas which are more susceptible to the influence of climate change. Close to the coast, low-lying areas. And they just won't insure those areas, so they'll push up the premiums and leave a lot of areas uninsured. They're still making pretty good margins, as we've said. Close to 25% in some years.
That's pretty huge, but it's
they
still
they can lose a lot of that and still be in business.
Yeah, but if you start having a flood that wipes out a whole state in the United States, or wet bulb catastrophes that have similar levels of damage, then it's just like that. The example I gave of the Australian stock market. It rose by 80% between 1980 and 1987 and fell by 25% in one day. Now, you're doing very well until the 25% day. It's the sudden impact of a huge shock, and suddenly you look at it, and if you're going to meet the claims you can't disallow, then you go bankrupt. So I'm just hoping insurance companies start looking at the research I've done for starters with Carbon Tracker and look at that report and just see that it has implications not just for the pension industries but for insurance specifically. And unless we drastically change direction, insurance will no longer be a viable business. So if 2.5% of GDP, we lose it. It's not a loss in the same sense of losing 2.5% GDP coming from steel output, for example. But what it means is all these industries, all these professionals making a very good living out of insurance suddenly end up being in a devastated business. So it hasn't happened yet, but I hope insurance companies get in touch with me and say, how the hell can we fight this stuff? Because it's the increase in systemic risk that's making their businesses non-viable.
But how
and they're
can
on the
they?
very front line of that.
If they came to you and said, well, what do we do, Steve? What would you say?
I'd be saying political lobbying. I mean, because a huge part of this nonsense lack of action we've taken is because fossil fuel companies have used the bullshit. That's a technical term, by the way. The bullshit published by mainstream economists that trivialises the dangers of climate change. They've happily used that to continue pumping oil out of the ground. And that applies to the state enterprises involved in it as well as the private ones. But insurance companies, again, 2.5% of GDP, it's not trivial. That's something comparable to the scale of the fossil fuel industry itself. They could be saying, we want real action here, and we want to expose what the fossil fuel companies are using to prevent real action is based on research that you should not even use as an adjunct to your activities in the bathroom. Okay, it's that bad. So the stuff that got published, got bloody Nobel Prize for Nordhaus, all this sort of stuff, this has real consequences for real businesses. And the first businesses on the line are the insurance companies. Right. So I'm happy to give out my number.
So you think the insurance industry actually could be
it could play
the
a role.
Force that has the biggest influence because they've got the most to lose, because they've
got the most to lose. They're people, the wealthy individuals, wealthy institutions, Lloyd's, of course. Being at one stage being made a Lloyd's member was both a privilege and a recipe for never-ending income. All this sort of stuff's going to go. So if you're wealthy, courtesy of your holdings of insurance companies or working as a lawyer for them, for Christ's sake, get in touch with me, because the estimates you're making on the systemic risks are completely distorted by the garbage published by neoclassical economists, which, not being experts in economic theory, mainstream insurance companies and lawyers have accepted. It's all garbage. And if anybody's going to suffer from that in the very first instance, it's going to be the people owning insurance companies or working for them.
So if insurance was provided by the government rather than by the private sector, or there was some sort of hybrid approach, and I used to work for the British government. I worked for the British Tourist Authority for many years. A lot of travel involved in that. We could never take out insurance. It just wasn't allowed because we worked for the government. So the government was its own insurance. So if there was a price to be paid, the government would say, well, why should we pay premiums when we can just pay out ourselves, because we are such a significant amount of money. We are our own insurance scheme, in effect, by the sheer size, which makes a great deal of sense. Can't understand why many governments in other parts of the world do take out insurance policies. And you're thinking, well, why? Just pay out the
costs. They don't understand government finances.
Well, maybe, but yeah. But in any case, even if you didn't, you just think, well, just put those premiums to one side if you want to, and just create a fund and invest it, which is what insurance companies do, and then pay out when you have to. There you are. We've got a government-owned insurance company.
That's not a solution to this problem, though.
No, it's not. And actually, my question was going to be, but if the government did take over all insurance and you didn't have this private sector insurance, could that canary in the coal mine sort of disappear, or could its influence wane? Because it would just be the government making the call rather than these very, very wealthy individuals.
What I'd see coming out of that is rising insurance premiums leading to governments like Starmer and Reeves deciding to cut back on winter fuel allowances and things like that. But they'd never do without provocation, of course. But yeah, governments would end up trying to balance, reduce their deficit and undersupply other things, making the absence of worthwhile insurance even worse. So I don't see that as a solution to this issue.
Yeah, but not for this issue. They have a role to play, as they have in health, in providing insurability for those people who can't afford it, because there's the massive underinsurance, particularly in lower income households. So you've got to protect those people. So there needs to be some sort of hybrid model, which is different to what you're talking about. So how quickly? When do you think that insurance companies will start to squeal? Because even with all these outside, even with these, you think this decade, because they're still making these healthy margins.
I know, but the margins will collapse when you start getting, systemic climate events, not just episodic weather events, but systemic climate events. And you can't pick where it's going to happen first. I'm still, if I had my bets on where we're going to see a crisis that wakes people, WTFU, which what the initials stand for, don't you? I won't repeat them. It's saying what the fuck, wake the fuck up is rude on podcasts. So
I'm not going to say it, he says, and then instantly goes on to say it. There we are.
I can't.
Sorry, YouTube.
You got to play with the medium, mate. But it's Texas is my odds-on favourite for something catastrophic happening, which is a wake-up call, because Texas is isolated from the rest of the American energy grid. It has high humidity as well as high heat. You have areas which are very dry, which could have severe droughts that could extend. You've got areas that are susceptible to cyclones and massive flooding. So a combination of a cyclonic event, which enormous amounts of rain is dumped, wipes out parts of the infrastructure, the power system goes down, and people are stuck 6 or more hours in wet bulb temperatures over 29 degrees. The most recent research has dropped the wet bulb temperature estimate that it leads to death within 6 hours from 35 degrees, which is 35 degrees and 100% humidity. It might be, say, 50 degrees and zero humidity across that line. We used to think that was the deadline. Now it appears to be 29 degrees, which is much more achievable, of course. So, if that happens in Texas, then we might get the wake-up call. But then when that happens, the insurance payouts to Texas will be impossible. So at that point, insurance companies could wake up and realise they've been conned. So I'm a pessimist on this front. I'm not an expert on climate change, but I've read sufficient of the literature, and I know I'm on speaking terms with quite a number of the leading climate scientists, and picking up their vibe and their fears. 2025 was the year they started to say this could be the holy shit year.
So the upshot of all of that is that the insurance industry becomes untenable. So you have to the provision of insurance has to be we have to rely on the government to do that.
Well,
or we just are uninsured.
That's going to happen to the finance system as well, because when you start getting catastrophes that wipe out the possibility of housing in places like Florida, then you are not going to have the private banks are going to find that all the people who can't get insurance, and the insurance will be there to help them pay their mortgage when the house gets wiped out or destroyed by a flood or whatever else. They will then find that they have bad debts which can't be met, and they'll start falling over. So in that sense, the canary in the coal mine for climate change will be the finance sector, and the leading the beak of the bird is going to be the insurance industry. I've run out of
analogies. There we are. Yeah.
I've done my analogies for the morning. Except for marshmallows. I've got to work marshmallows in somehow.
Yeah, well, maybe there's a marshmallow just sitting on the beak. It's just stuck on the beak of the bird. That's
dripping
right.
off.
I've experienced the collapse of the marshmallow from my own experience. I don't know. Anyway.
You've got to show us, marshmallow. Get your miles worth. You could save an average of 220 quid, yada, yada, yada,
by moving
marshmallows.
Yeah. All right, very good. I think we've given them enough of a hard time. Look, I'm surprised you're speaking up for the insurance industry in some ways, but because we need it, because it's that canary.
It is.
Always uplifting talking to you, Steve.
There you go.
I'll try.
Marshmallows rose the tone dramatically.
I'll try and have a good day. I'll catch you again next week. Thanks.
Okay, mate. See ya.